Patel, you made a statement about 2 days ago. The amount of messages I got about you, Chris, you got a lot of explaining to do. We got to understand where you're coming from here. You made a statement that you bought puts on Palantir, not selling cash covered puts, you're buying puts. So in some way, it's bearish, and so if the price goes down, you're kind of hedging, right? You're doing something that's what a responsible investor does. If the price goes down on earnings, you at least you don't get that much pain. Now, you changed the decision. You exited your bearish puts today off the news that Palantir has increased their workforce by 25%. Obviously, that's rather bullish, one could say objectively, because that means they're growing. But you could also say that might be bearish because it's going to screw over their margins if they're hiring that many people. So what are your thoughts right now, Chris? And can you explain to us your option strategy around Palantir?
So I bought my puts earlier in the week when we had that giant run up. And what I was looking at the time was a lot of the run ups that I saw in the meme stocks, right? So you had the HKD nonsense, the AMCs, the GameStops. So when I see things like that, I know that there's got to be some market over exuberance that's kind of like casting its way into a little bit of Palantir, because at one point a lot of people didn't realize, but Palantir was also categorized into the meme stock frenzy. So for me, it was like, okay, is this increase material based on company's performance or news that's out there right now? Or is it just based on random people saying, you know what, I'm going to throw money at this and ride it up. And then all of a sudden we get that downward move, right? So if you look at a lot of these meme stocks, they're pretty much like a game of musical chairs where, eventually the music's going to stop and then whoever is not in the chair is going to fall down. Now, what was good is because of that run up, the price on those put contracts wasn't that expensive. So I think Palantir was trading at like I think 1134, 1135 that day, and the puts that I bought were around like 56, 57 cents. So at a $11 strike. So I was like, okay, if I buy these at the most when it goes down, I'll end up breaking even from some of the stuff that I have, or not losing as much, right? So based on my assumption, I was like, you know what, it might be a good hedging strategy just to buy some puts for next week, just in case the earnings doesn't come, turns out not to be that great. Or now that we live in this world of all this indexing, if the general market takes a downturn, regardless of how Palantir does on its earnings, you know, you could be screwed over. Palantir could have great numbers, but the market it has an overall down day, just like you said, right? So what do I want to do? Well, I want to be in a position where I can capitalize on that. So I bought some puts. Now today I changed my mind a little bit, and I sold my puts for two reasons. One, because of the news that came out that Palantir is doing its hiring. So the question that came to me automatically was, number one, why announce the hiring now? Like on a Friday right before earnings. Why not do it during earnings, saying, hey, we had a great quarter. We're going to capitalize on this upward momentum. We've got the cash to do it. Let's go for it, right? That would have kind of boosted some positivity right there. And then at the same time, I'm asking myself, what is the downside to this? Are they preparing us for a bad quarter? Saying that, hey, you know what, we don't want to announce that we have bad numbers and then at the same time announce hiring, which makes it go down even further. So it literally was such a binary thing that could have happened for us on Monday. So I wanted to make sure that I was hedged, but it could blow either way. Like if the numbers come up good and higher than what people are expecting, which might actually be the case. If you look at the earlier numbers from Cloudflare this week, they were tremendous, right? So if we have a huge run up, I didn't want to end up getting a sign of have my entire put premium go to waste. So yeah, I ended up selling some of my puts. I'm riding the market along with you guys.
So you didn't lose any money selling the puts, right?
No, I broke even.
Okay. So now, is there any world in which you thought the hiring news was bearish because it's going to cut margins? So you thought keep the puts, or how did you rationalize that?
So my So my logical thinking told me that if they're talking about hiring, that means that they're drumming up more business. Otherwise, why would they be hiring more people, right? We're also going to have to take a look at the roles to which they're hiring for. Are they hiring more salespeople, or are they hiring more forward deployed engineers that are going to be working with clients in order to support their businesses? So all in all, the total number is what really got me to say, okay, 1,000. That means that not in the entire 1,000 can't be all salespeople, right? A lot of them are going to be people that are going to be supporting the product itself. So when it came to that, I was like, all right, I think they're going to have good numbers, and if they do have good numbers, then they can say, see, this is why we're doing the hiring. We just announced it last Friday, right? Um, I do have to say one thing that's a bit bearish. Pretty much everyone thinks I'm the resident bear these days anyway, so I might as well just say it. From an industry standpoint, people are cutting back, like cutting back in terms of hiring and everything else. But that's mainly because a lot of the businesses are also cutting back on spend. Anytime you look at the data analytics market and stuff like this is not a core function of most businesses. This is a discretionary spend item, which means that, hey, if you're not getting absolute business value that's tangible, you know, before you start firing people and laying people off, you're going to say, okay, let's cut back on some services. So right now, if you look at Snowflake, if you look at some of the other ones that provide data analytics, they're cutting their workloads down. They're trying to, like, every company's trying to cut back a little bit. So this way they're conserving some of their resources. So all in all, Palantir is going to be in a difficult position in terms of like trying to raise guidance unless they got some big contracts lined up and maybe possibly some big revenue recognition from the Ukraine thing. So I think there's just too much binary movement towards towards a positive and a negative. So I don't know. So but like I said, I'll ride with you guys. I think we'll have a decent quarter. In which case, at the worst, in my opinion, we'll trade flat at $11.
Okay, Matt, your thoughts on the 25% stuff, and any general thoughts before earnings?
I honestly don't think it's a really bad move to buy puts, and the reason being is I'm a long term believer in Palantir. I'm a person that's going to be holding it in 2030 and beyond. But I do see the instability of the market here. I think we're in a very unforeseen time with respect to rising interest rates and the unloading of the federal balance sheet and everything that comes with that. Cheap money is gone, and so while the cheap money was here, we saw the meme aspect of Palantir and what that did to the share price. And we've seen what it's done ever since the memeness has gone away from the market in the mid 2021 timeframe. And to be very frank, if you were to look at what Palantir brings to the table on a cash flow from operations basis and a net income basis, after you incorporate share-based compensation and everything the like, it's not a $12 stock. It really isn't. I believe in the long term that it's a $100 stock, and I believe that in the long term it will become the company that we all believe in, competing with a lot of the other super big tech companies that we have out there. But I agree with Chris here. I think with where it's at today, in the short term, it's overvalued. But you also have to recognize that sometimes companies trade at premiums just based off the fact of the future value of the business as well, and people might actually buy into. So now that maybe all these meme investors have kind of come out in the beginning first 6 months of 2022, now an actual firm, steady foundation of believers like we have on this weekly Palantir conference call that we always have is actually plowing into the stock. And those are going to be the firm foundation of the owners that aren't going to sell at the drop of a hat like some of those meme guys.
Yeah, I mean, I think that what the cool thing about the community we're building is that on earnings, if it goes down to like it's crazy, right? It goes down to like 8 or 7 or something. I think a lot of us are going to be happy because I know a lot of us felt a lot of FOMO, including myself when when it's touching 1140, and I didn't buy at 6 because I'm like, A, I didn't have the most dry cap powder in the world. I have a lot more now. And B, I was just like, I don't want a DCA. I feel like the sky is ending, right? And granted, you're always supposed to DCA, but I think if we get an opportunity, a lot of us will harp on that opportunity again. Especially on the news of this growth. Like you do not, as you said, you do not hire 25% more people, almost 1,000 more people because things are slowing down. So I think we are seeing some cool stuff.
Well, I mean, it's an interesting thing because it's very like the way that it was described as. It is a contrarian play, right? While everyone is laying people off, laying engineers off, laying software people off, laying sales people off, Palantir is hiring. Well, right now, Palantir, I feel like it's almost backed up into a corner to hire people, because if you want to grow your business, right, the best thing you can do is invest when others are pulling back, right? A lot of
Yeah.
companies are probably pulling back on incentives in order to get them to buy the product, right? It's like Snowflake. Snowflake is probably cutting back. Databricks is probably cutting back because they need to keep keep more money. The business decision that they've made is that they're trying to restrict their own restrict their growth because they don't feel like the investment is worth it. Palantir's market share is so low right now that when your larger competitors are out there, like really taking a step back, you should be taking a step forward. And so I think this was a very calculated move by Palantir's management, saying, you know what, while everyone is taking a step back, cutting back on things, we're going to double down and invest in our business because we believe it, right? So right now, maybe Snowflake sales reps are not going out there as much. Maybe Databricks Salesforce are not going out there as much. Maybe they're getting cutbacks on their hours. Maybe they're getting cutbacks on their commission. Palantir's like, screw that shit. Let's hire these guys. You know, let's hire this. Let's hire right now. Palantir is probably getting a pick of the litter in terms of employees because of all the tech companies that have laid people off. Imagine right now how many laid off employees right now are probably going to sign up with Palantir, who've got years of experience behind them, industry experience, industry connects that are just going to translate into more business.
And
once
even
we
if
do
that
recover.
screws the short-term margins, I mean, it seems like they're playing the long game here, right?
Yeah, absolutely, absolutely. Sure.
I mean,
So that,
the gross margins are still so high. I mean, they're in the
Yeah.
80, close to 80% for gross margin. I mean, the only thing that impacts the overall net margin when it comes to the net income piece is mostly the share-based compensation. I mean, if you're looking at cash flow from operations for the organization, it's a healthy company when it comes to cash flow from operations. The only thing that is anybody could ever point to about the health of the company is the fact that they have the share dilution of the share-based compensation, which actually in GAAP ends up coming into the net income piece.
yeah, and that's one of the good things about Palantir is that it drums up so much business from the government side, which, believe it or not, the government rarely cuts back on spending. I've never seen the government ever cut back on stuff. They always expand on spending. Very few times will they cut back. So when it comes down to it, Palantir doesn't have to worry nearly as much as people that are more reliant on commercial players. Commercial people, because they're privately owned businesses, have to be capital efficient. The government can just print more money. Right now, the military is printing all the money they have. Like if you look at the Pentagon slush budgets right now, the discretionary money that they have to spend, it's out of this world. Considering that
Yeah.
we have two confrontational enemies in Russia and China at the same time. If anything, Palantir Gotham is probably going to outperform the next couple of quarters while we see a possible pullback a little bit on Foundry. Not
Right.
every business has the ability to do that, you know.